MicroStrategy just launched something that could fundamentally reshape the entire fixed income market. I'm talking about their new Bitcoin-backed preferred stocks offering yields up to 10% annually, something that's never existed before. Traditional pension funds and institutional investors are scrambling to understand what this means for the $50 trillion global bond market. Today, I'll break down exactly how MicroStrategy's innovative approach could trigger the biggest transformation in fixed income investing since the creation of corporate bonds themselves. The problem: the fixed income market has been operating under the same principles for decades. Traditional corporate bonds, government securities, and preferred stocks from established companies have provided steady, predictable returns for institutional investors managing trillions of dollars. But here's the problem. Yields have been historically low, and institutional investors, pension funds, insurance companies, endowments have been desperate for higher-yielding alternatives that still maintain investment-grade characteristics. Enter MicroStrategy's revolutionary approach. In 2025, they've launched multiple preferred stock offerings: STRK at 8%, STRF at 10%, and STRC with variable rates starting at 9%, all backed by the world's largest corporate Bitcoin treasury. This isn't just another preferred stock offering. It's the first time a major corporation has offered institutional-grade fixed income securities directly tied to Bitcoin accumulation. The implications are staggering. We're potentially witnessing the birth of an entirely new asset class that combines the stability and predictability of traditional preferred stocks with exposure to the world's fastest-growing store of value. The question isn't whether this will change the fixed income market, it's how quickly and how dramatically it will transform everything we know about institutional investing. The creation of a new asset class, what MicroStrategy has done is unprecedented in financial market history. They've raised over $563 million through their STRK preferred stock offering at 8% annual dividends, followed by $711 million through STRF at 10% annual dividends, and most recently $2.47 billion through STRC with variable rates starting at 9%. This isn't just about higher yields, it's about creating the world's first Bitcoin treasury-backed institutional fixed income securities. Traditional preferred stocks are backed by the issuer's business operations and assets. MicroStrategy's preferreds are backed by over 630,000 Bitcoin worth approximately $70 billion. The structural innovation here cannot be overstated. These perpetual preferred stocks typically have no fixed maturity date and continue indefinitely unless the company chooses to redeem them. Unlike traditional corporate bonds that depend on cash flows from business operations, these securities derive their value and payment capability from Bitcoin appreciation and the company's strategic accumulation model. This creates an entirely new risk-return profile that institutional investors have never seen before. You're getting the legal structure and priority ranking of traditional preferred stock, but the underlying value proposition is tied to digital asset appreciation rather than traditional business metrics. Institutional demand and market dynamics: the institutional response has been extraordinary. According to benchmark analysts, perpetual preferreds would be attractive to big institutions like pension funds and banks, as they would receive a stable and fixed dividend payment. Here's why this matters. The ICE of a fixed-rate preferred securities index offered a yield to worst of more than 5.5% in mid-January 2025. MicroStrategy's offerings at 8-10% represent a significant premium over market rates, but they're achieving this through Bitcoin-backed cash generation rather than increased credit risk. The institutional market has been starved for yield. Insurance companies and big institutional investors tend to buy preferred stocks and hold them until they mature, making them ideal long-term holders of MicroStrategy's Bitcoin-backed preferreds. What's particularly compelling is the tax advantage. For the vast bulk of the preferred sector, their dividends count toward the lower tax treatment of qualified dividends. For investors in the top tax bracket, that's just 23.8%, including the Medicare surcharge. This makes MicroStrategy's high-yield preferreds even more attractive on an after-tax basis compared to traditional corporate bonds. The demand has been so strong that MicroStrategy launched a $4.2 billion at the market program for additional STRC stock sales, indicating institutional appetite far exceeds their initial expectations. Disruption of traditional yield relationships. MicroStrategy's approach is fundamentally disrupting traditional yield relationships in the fixed income market. Historically, higher yields meant higher credit risk. That's the basic principle underlying all bond pricing. But MicroStrategy's preferreds break this relationship. They're offering 8–10% yields not because of increased default risk, but because their cash generation model is tied to Bitcoin appreciation rather than traditional business operations. Preferred securities generated a healthy total return in 2024, outperforming most fixed income categories, including high-yield bonds. The traditional preferred market delivered 9.1% returns, but MicroStrategy's Bitcoin-backed preferreds are targeting yields that could potentially deliver total returns significantly higher than this. This creates a new paradigm where institutional investors can potentially achieve high-yield returns with a fundamentally different risk profile. Instead of credit risk, you're taking on Bitcoin volatility risk and regulatory risk, but you're also getting exposure to an appreciating asset with a fixed supply cap. The ripple effects are already visible. Other companies are studying MicroStrategy's model, and we're likely to see more corporations attempting to create similar Bitcoin treasury-backed securities. This could compress yields across the entire preferred securities market as investors demand Bitcoin exposure or higher yields to compensate for its absence. Regulatory and structural implications. The regulatory implications of MicroStrategy's preferred stock innovation are profound and largely uncharted. These securities exist in a gray area where traditional securities regulations meet digital asset regulations. MicroStrategy's leadership designed an offering that offsets structural shortcomings by providing competitive dividends and potential conversion features. The conversion feature is particularly interesting. Each STRK share is initially convertible into 1/10 of a Class A common share, implying a $1,000 per share conversion price. This creates a hybrid security that functions as a bond for yield-seeking investors but has equity upside potential if Bitcoin continues appreciating. It's essentially a structured product that didn't exist in traditional fixed income markets. The regulatory treatment of these securities will likely set precedent for the entire crypto financial industry. How the SEC, banking regulators, and international authorities classify and regulate these hybrid crypto treasury securities will determine whether other companies can replicate this model. There's also the systemic risk consideration. If these securities become popular enough to represent a significant portion of institutional fixed income portfolios, Bitcoin volatility could directly impact pension funds and insurance companies in ways never seen before. The future of corporate treasury and capital markets. MicroStrategy's preferred stock innovation represents more than just a new security type. It's a preview of how corporate treasury management and capital markets could evolve in a Bitcoin standard world. The company is targeting up to $2 billion through perpetual preferred stock offerings as part of their ambitious 21/21 plan, which aims to raise $21 billion in equity and $21 billion in fixed income instruments from 2025 to 2027. This scale of Bitcoin-backed securities issuance could create an entirely new segment of the fixed income market. We could see the emergence of Bitcoin Treasury corporate bond indices, specialized institutional funds focused on crypto treasury securities, and new rating methodologies that incorporate digital asset holdings. The competitive implications are significant. The $1.3 trillion global preferred securities universe is large and liquid, offering ample investment opportunities. If MicroStrategy's model proves successful, other corporations may need to adopt similar Bitcoin treasury strategies or offer higher yields to compete for institutional capital. This could drive broader corporate Bitcoin adoption, not necessarily because companies believe in Bitcoin as a technology, but because the capital markets demand Bitcoin exposure for competitive yield generation. The tail could wag the dog, with fixed income market dynamics driving Bitcoin adoption across corporate America. This transformation is happening in real time, and understanding these dynamics is crucial for anyone involved in institutional investing or fixed income markets. If this analysis helped you understand how MicroStrategy's innovation could reshape the entire fixed income landscape, please subscribe and hit the notification bell for more deep dives into the intersection of traditional finance and digital assets. The fixed income market hasn't seen this level of innovation since the development of asset-backed securities decades ago. MicroStrategy's Bitcoin Treasury preferred stocks could be the beginning of a fundamental shift in how institutions think about yield generation and risk management. Remember, this is educational content and not investment advice. These securities carry significant risks including Bitcoin volatility, regulatory uncertainty, and the potential for dividend suspension. Always consult with qualified financial professionals before making investment decisions. Thanks for watching, and I'll see you in the next video.